Hello everyone, and I welcome you all to the fourth day of this Practice to Pass Taxation UK examination webinar. And again, I'm telling you guys that we are here for the practicing techniques to learn the practicing techniques which can help us pass the exam, right? So on the day one, we covered capital gains tax, and we also did some practice examples on which are basically, yeah, sorry, I think my audio was just lost. So I was telling you guys that we did 6 long questions from the constructed response area, from the ACCA CB practice platform, and from the Kaplan exam kit as well. So today we are going to discuss, or we can say we will be discussing corporation tax, which is the second major area of our syllabus, and that is again very important in order to pass the exam. I'm just gonna share my screen. So guys, this was my brief introduction. I am Suleiman Khan. As you all know, I am an ACC member and an ICAW finalist. I am currently teaching in School of Business and Management Islamabad, that's SBM Islamabad for short. And SBM Islamabad is a gold status tuition provider for ACCA. And we have been producing marvelous results from the last like more than a decade. And just to bring it to your attention again, that our webinar will end on 12th of February. That is because today is the second last day and tomorrow will be the last day of the webinar. Timings are 4 to 7. So make sure that you guys join on time so that we can get the maximum benefit out of it. So guys, I think let's get started. The topic, the main topic for today is corporation tax. I think I'll be switching off my camera so that you guys can have a good bandwidth. Okay, so guys, corporation tax is the tax which will be charged on the company. In the last 3 days, we discussed income tax and capital gains tax. Those were the taxes which have to be charged on the incomes and gains of individuals, right? Today, we are going to discuss that how companies will be taxed in the United Kingdom. Companies in the United Kingdom all have to pay corporation tax, and it includes all the incomes and gains of the companies. Like just on the first day, we covered capital gains tax, and in that topic we discussed that capital gains tax has to be paid by individual. But if a company has sold an asset, if that is the company has realized a chargeable gain, even on the gain of a company, still corporation tax will be paid. So let's discuss that who or which company will be paying corporation tax in the United Kingdom. It says UK resident companies. Now, what is a UK resident company? It says a company is said to be a UK resident if it satisfies any of the following two criteria or conditions. Number one is company is incorporated in the UK or under the UK law. Then it says if a company is not incorporated in the UK or under the UK law, but it is centrally managed and controlled from the UK. And by centrally managed and controls, I mean that the major meetings are held in the UK. The control or the board of directors offices are in the UK. For example, if a company is in Germany, but the executive office of the company is in the United Kingdom, so that company is said to be a UK resident company. And if the company is a UK resident company, this means that the company has to pay the tax on incomes and gains in the United Kingdom, right? So coming towards the basis of assessment of the companies. Yesterday, we discussed the basis of assessment for a sole trader business. Today, we are going to discuss that how to prepare the basis of assessment for the company. The company will be assessed according to the accounting period. Now, accounting period is not the period of account for which the company was preparing its accounts. Accounting period is something else which has to be derived from the period of account. Period of account is normally of 12 months. It can be shorter or it can be longer than 12 months period. We discussed that thing yesterday as well. Now, if we come about accounting period is normally of 12 months. It can be shorter than 12 months, but it cannot exceed the period of 12 months. Like for example, if a company has a period of account of, say for instance, 15 months, then we will be dividing that into two parts. The first accounting period will be of 12 months from the commencement date to obviously the next 12 months, and the remaining second accounting period will be the remaining months. That would be the 3 months period. Again, 15 months period of account will be divided into two accounting periods. First will be of 12 months, the remaining will be of 3 months. But because we discussed that period of account cannot exceed period of account can exceed 12 months, but accounting period cannot exceed 12 months, right? So then there's a question, then when an accounting period starts? It says when the trading begins, like when trade begins, trade starts, when any income is received after 12 months of the previous accounting period. In exam questions, the examiner has tested this thing several times, that normally it gives the date of incorporation and then it gives the date of trading, the date when the trade begins. And normally students start the accounting period from the date of incorporation, but it is not correct, because the law says that the accounting period will start when the company will begin to trade. Okay, now I think we know that when accounting period will start. Let's talk about when it will end. It will end on the cessation of trade, or it will end after the 12 months of the start of the accounting period, or it will end at the end of the period of account. Whichever date is earlier, at that date the accounting period will end. Then, as discussed, if a period of account is more than 12 months, we have to divide it into two chargeable accounting periods. Obviously, first will be of 12 months and the second will be of the rest of the months, or the remaining months. Then talking about shorter accounting period. If the period of accounting period we have made for a company is less than 12 months, then we will be dividing the limit for the company. The limit for the company is 1500,000. The limit is basically to decide whether the company is large or small. The limit is 1500,000, and if the taxable total profits of the company are more than 1500,000, then this means that the company is large. Otherwise, the company would be small. The difference between the small and large company is only with regards to tax payment, that the small company has to pay tax in one payment and the large company has to pay tax in the 4 installments. We will be discussing that thing in a while. Okay, most importantly, with regards to individuals, we were talking about tax year, but with regards to company, we'll be talking about financial year. Financial year is almost the same as the company, as the tax year, but it starts on 1st April 2019 and ends on 30th 1st March 2020. The tax year started on 6th of April and ended on 5th of April. But with regards to financial year, we have a precise date that it will be starting on 1st April 2019 and then ending on 31st March 2020. Currently, we are studying tax year 2019-20, and that's financial year 2019. Okay, now let's go through the format, or you can say the performa or computation for corporation tax. Corporation tax is pretty much simple because it is many of the things in the corporation tax are based on the basic topics of income tax. We have already discussed them on the day 2 and day 3, like yesterday and day before yesterday. You can see the format for the corporation tax computation, and it starts with tax adjusted trading profit after capital losses. We discussed that yesterday in the income tax portion. Then investment income. Obviously, investment income means interest. If the company is receiving any interest, that would be interest income, and it will be assessed in the corporation tax on the loan relationship rule, and we'll be coming to that later. Then it says property income, but again, see the bracket, it says accrual basis. In individual, property business was taxed under accrual basis, or there was also an option to use the cash basis. And we just studied that if the income is less than 150,000 pounds, we definitely have to assume that we will be using the cash basis. But in corporation tax, if a company is going to have a property income, it will always be taxed, or it will always be calculated using the accrual basis. And accrual basis means that if the income or expense is related to that accounting period, then it has to be written down in this accounting period. Moving on, this format also includes chargeable gains. If we talk about income tax, in income tax, there was no chargeable gain, because if an individual has a chargeable gain, a separate category of tax, that is capital gains tax, was applying on that. But if a company is having a gain, still the company has to pay corporation tax. Now, if we make a total of all of them, we'll be getting the total income for the company. And from this total income, we will be deducting the qualifying charitable contribution. In income tax, we use this amount to increase the tax limits. First, we grossed it up by 100, divide by 80, and then use that gross amount to increase the tax limits, the bands, and also use it to reduce the adjusted net income. But in corporation tax, if we have a qualifying charitable contribution, it has to be deducted from the corporation tax computation. After deducting the qualifying charitable contribution, we have the taxable total profits. And this is the amount on which corporation tax has to be applied. Like, we have to multiply the corporation tax percentage with taxable total profits. But again, taxable total profits are not the one who will be deciding that whether company is large or small. We have to add the dividends received to the company from non-group companies. Like, non-group companies are obviously the companies which are not our subsidiaries, or in tax we say associated companies, right? So we will be adding the dividend, and then we get the augmented profit. Augmented profit is only there to decide whether a company is large or small. For example, if the augmented profit of a company is more than 1500,000 but taxable total profit is below 1500,000, still the company is large. We will be applying the tax rate on the taxable total profits, but again that tax has to be paid to HMRC in installments. I hope I have made all these points clear. Moving on to the tax rates. Tax rates on the company are applied according to the financial year. Remember, taxable total profits are calculated in accordance with the accounting profits, but the tax rates has to be applied in reference to the financial year. For example, if I have a company and the company has an accounting date end of 31st December 2020, like it started on 1st January 2020 and ended on 31st December 2020. So this means that this accounting period is falling in two financial years. January, February, and March will be taxed in the financial year 2018, and from January, February, and March will be taxed in financial year 2019, and from April to December it will be taxed in the financial year 2020. So we will be apportioning that portion by applying the tax rates. The tax rates for the financial year 19, 18, and 17 were all 17, or overall 19%, and the limit that was used to decide whether the company is large or small is 1500,000. Okay, guys, let's move on and let's discuss that what is the difference, or what are the main differences between the trading profit calculation for companies and individuals. Starting with trading tax adjusted trading profit. This topic was also covered in the income tax, and we discussed that topic in detail yesterday. The main difference between calculating the tax adjusted trading profits for individuals and companies is that companies ignore the private use. Like in individuals, we discussed that if the owner is doing some private use of the business assets, then that private use was disallowed. But again, for company, all private use is allowed, right? So this was the main difference. The rest of the format is exactly the same. As you can see, net profit before interest and tax. We added disallowed expenses. Obviously, these were the expenses not allowed by the taxation authorities but have been deducted in calculating the accounting profit. Then we are adding the income not in the income statement, but still it is taxable. Then we are deducting the other head income, obviously the income not related to trading, for example interest, rent, etc, etc. And then at the end we are deducting allowed expenses, and that was capital losses. So moving on, it said allowed expenses are the expenses which have connection with trade, and disallowed expenses which have connection with assets are disallowed, obviously the capital expenditure. We discussed that yesterday as well. Then it said expenditure is not deductible if it's not for trading purpose. Then this is the main point. Private portion of expenditure is ignored. In the case of individual, the private portion was disallowed and we added that back. But in the case of companies, private portion is also allowed. Then there are some more changes. Like we discussed, subscription to professional body was allowed for individual and for the company as well. Political donation was disallowed for individual and the companies, but this is a new thing, that is subscription to chamber of commerce. As we all know that if I have to register a company, I do have to make a registration with chamber of commerce as well. So that registration is necessary to keep my business going on. So if I paid some subscription to the chamber of commerce, that is for trading, and obviously that is an allowed expenditure. Talking about donations, it said journal donation is allowed expense in trading profits if it satisfies following three conditions. It must be paid for business purpose or promoting business name, must be reasonable in size of business, it must be paid to recreational, religious, cultural, or educational body. If these three conditions will meet, then this means that the donation is allowed expense and can be deducted from the trading profit. But if any of the condition is not met, it said note, if the first two conditions does not meet, then it's subtracted from charges as gift aid donation. For example, if a company has made a donation under the gift aid scheme, like gift aid was the previous name for qualifying charitable contribution. So if a company is making a qualifying charitable donation, it has to be added back to the trading profit because it is not a trading expense. But if it was a qualifying charitable contribution, it will then be deducted from the corporation tax computation. We just have shown that, right? Then donation to national charity not made under gift aid, again still it is disallowed from trading, but now it will not be deducted from the corporation tax computation. Then again, donation to local charity was allowed if it carried advertisement, and then cost of seconding employees to charities or educational establishments are also allowed. So these were the main differences between uh, the individual's tax adjusted trading profit and the company's tax adjusted trading profit. The rest are all the same, and you guys can read it from the notes I have put up in the handout section. You can download the notes from there. Okay, let me check. Okay, I have a question from Misbah. She said, explain private use expense. Okay, Misbah, in the case of individuals, if you remember, we yesterday discussed that if an individual is making a private use of some business asset, the private portion was disallowed and we added that back in the profits. But if it is the case with the company, that private portion will always be allowed. Because, for example, if a director is making a private use of company's asset, still the director is the employee of the company. If private use has been done by employee, it is always allowed. In the case of individuals, like in the case of sole trader, we considered that the directors are normally the owners of the company, owners of the business, sorry. So the business was owned by the owned by the directors, and they are making some private use, so that was disallowed. But in the case of company, even the directors are considered employees, right? So anything done by employee was always allowed in individuals and in the company as well, right? I hope I have answered your point. If you still have an issue, please do let me know. Okay, I have another question from Hasib. Is parking fines paid? Okay, Hasib said, sir, if the parking fines is paid by the employee, is it an allowable expense for corporation? Hasib, basically we are talking about that company is paying on behalf of employees. If the company has paid something for on behalf of employees, it is allowable. Otherwise, it is not allowed. Okay, I think Hasib, I have answered your question. So moving forward, yeah, let's discuss loan relationship rule, and that thing is new. Loan relationship rule covers basically the investment income, right? It said that if a company has received interest which is relevant or non-relevant to the business, because you receive interest on savings, and savings are never related to trading. So if a company is receiving an interest, it is always non-trading, and if it has been added in the trading profits, we have to deduct it as an other head income, and then we will be adding that in the corporation tax computation as investment income. So moving on to trade interest payable, it said if the interest has been payable, which is the trade related loan interest, it will be deducted from the trading profits. But if the interest paid does not relate to the trading activities, then it is disallowed in trading profits, and you have to deduct that from the investment income in the corporation tax format. Moving on to the capital allowances. Again, I'm discussing just the differences between the individual's capital allowances and the capital allowances for the companies. And the main difference was private use. In individual, we said that if an asset has been used for private purposes and we have to calculate the capital losses, we will be calculating that asset separately in a column asset with private use, or obviously motor car if it is a motor car. But in the case of company, if an asset has been used for private use, it still will be put up, or we will still be putting that asset up in the relevant column. For example, if it is a main pool asset, then we will be writing that in the main pool, right? Then it says companies can calculate capital allowances according to the accounting periods. There we were calculating it according to the tax year, but here we are talking about accounting periods. Then it says if period of account given is more than 12 months, then companies should split it between two periods, being first period of 12 months and the second of the remaining months. We discussed it just a bit ago. Then it said private use of car is ignored in corporation tax. Obviously, we will be ignoring the private use because private use is also allowed in corporation tax thing. Then let's discuss some differences between the property business income. We discussed the main difference, that was the change from cash basis to accrual basis. In cash basis, we just write those things income for which cash has been received, and expenses are the cash paid. But in accrual basis, we will be writing the incomes related to the accounting period as income, and expenses whether paid or not, if they are relevant to the accounting period, yes, they will be written up as an expense. Then if you remember that we discussed that if the loan has been taken to improve or acquire the property, I'm talking about individuals, then the interest of that loan, 25% of that interest was deducted from the property income. The remaining interest was multiplied by 20%, and that amount was deducted from the income tax liability as a relief. There is no such thing in corporation tax like that. It has a clear cut statement that if the loan has been taken for the property for improvement or for the purchase, it is a non-trading interest, and that has to be deducted from the investment income, not from the property income. I am repeating this point, that if you guys have taken a loan, if a company has taken a loan to improve or purchase the property, the interest of that loan will not be deducted from the property business income. Instead, that will be deducted from the investment income from the main corporation tax format, or you can say computation. Then, as regards to furnished holiday letting accommodation, there is no change. Furnished holiday letting accommodation, there were conditions like availability for 210 days in a year, actually let for 105 days, no more than 155 days in total should be the period of occupation, long-term occupation, right? The conditions are the same, and the treatment is also the same. Remember, if an individual had a furnished holiday letting, the profits from furnished holiday letting qualified as relevant earning for pension tax relief, right? There is no such thing for company. Moving on, lease sublease, exactly the same, no change. Rent a room relief, that is not applicable, because the company will not be letting out one room out of the main premises. So students, this was the main difference between individuals and companies with respect to trading profits, with respect to capital allowances and property business income. Let's move on to chargeable gains for companies, and let's discuss how the chargeable gain for companies are calculated. You can see the format on your screen. The format is exactly the same as we discussed the format for individuals, but there are slight changes, or you can say there is only one change. In case of individuals, we were deducting annual exemption of 12,000 from the format, but in the case of companies, we do not deduct the annual exemption because companies are not eligible to get the annual exemption. Instead, as a replacement to annual exemption, companies get indexation allowance. Now let's discuss what indexation allowance is. Indexation allowance basically incorporates the inflation in the cost from the date of purchase up till 31st December 2017. Like if an asset has been purchased after 31st December 2017, like 1st January 2018 or onwards, the company will not be eligible to get the indexation allowance. But if an asset has been purchased by the company before 31st December 2017, then indexation will be included in the cost up till 31st December 2017. Remember that in exam question, examiner might give you indexation factors uh, of like after 31st December 2017, but they all are irrelevant and you won't be using them if you want to pass the exam, right? So let's talk about the format. It says disposal proceeds, incidental cost of sale, the net sale proceeds exactly the same as individuals. Then it says allowable expenditure, unindexed cost. Now, unindexed cost is something else, right? Unindexed cost is the cost which do not include inflation. So we are taking the uninflated cost, that is the actual cost of acquisition, the incidental cost, any if the company has paid on the acquisition, enhancement expenditure, obviously the extensions, making a total of allowable cost. When deducting this allowable cost from the net sale proceeds, the company gets unindexed gain. Now, this unindexed gain means that there is no portion included in the cost, such as inflation. Then we will be deducting the inflation portion from that, called as indexation allowance. It says if the asset was purchased before 1st January 2018. After deducting the inflation, obviously, if we add inflation to the cost, it will be reducing the gains. So we are deducting the inflation allowance, like the inflation, from the gain and reducing the gain. Then we get the index gain. From this indexed gain thing, we will be deducting any current year or brought forward losses. If the company has any other loss, any other capital loss in the current year or a brought forward loss, then we will be deducting that from the computation. And finally, we get the chargeable gains, and these chargeable gains are taken to the corporation tax computation. We discussed that in the start of the start of today's webinar. Then there is a question that how indexation allowance will be calculated. You will be given an indexation factor in the exam question, and you just have to multiply that factor with the indexation. You just have to multiply that indexation factor with the allowable cost on which you are applying the uh, inflation indexation, right? Cost can be incurred more than one time, so you have to then take indexation factors from time to time. Like you have to take the indexation factor from the date of purchase or date of expense up till 31st December 2017. I hope I am clear till now. If anyone has some question, please do let me know. Okay, so far no questions, so I think I'm pretty much clear. So guys, let's talk about trading losses for companies. We discussed that yesterday, that if an individual has a trading loss from its business, that loss can be carried forward to the future trading profits, can be carried back, or can be adjusted against the total income of current year and previous 12 months, and even the capital gains of the current year and the previous 12 months. But after the loss has been adjusted against the total income of that specific year. Then we discussed that individual had an option to apply the opening year loss relief if it was the loss of the first 4 years of trade. Then uh, if the individual had made a loss in the last year of the business, that is a year of cessation, then the loss can be taken back to the trading profit against the trading profits of previous 3 years. There were there was also a thing called cap on income tax loss relief, where the loss was being adjusted against the total income. There are no such things in corporation tax. Trading losses in corporation tax are pretty much simple. It just has three options. For the ongoing business, for the ongoing business means that the business is not discontinuing, the business is not going to be seized. For an ongoing business, the company has an option to carry forward the loss against the future total income. And by total income, I mean total income, including gains, property, etc., 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 not only the trading profits, right? In individual, the carry forward was only against the trading profits, but in the case of companies, the carry forward is against the total income. Then the loss can be adjusted against the total income of current year and then previous 12 months. An individual, we had a choice, like we can adjust the loss in the current year first and then in the current year, and then in the previous year first against the previous year, then current year, or either year in isolation. But in company, we have a fixed law that loss can be adjusted, but it has to be adjusted in the current year against the current year total income first. Now total income was before the deduction of the qualifying charitable contribution, right? And if there is a loss at the loss after the adjustment against the current year total income, it will be taken back over the 12 months period. Then if still we have a loss, then that will be carried forward to the future. Let's see what it says. Carry forward loss relief. Loss is carried forward against first available total profits before QCDs. Obviously, QCD means qualifying charitable contributions or donations. Loss should be settled as much as possible. Loss can be carried forward indefinitely. There is no restriction on how many years loss can be carried forward. It can be carried forward till infinity. Then it says loss can be carried forward after the current year claim, after the current year and previous year claim, none of the above. This means that we have to use this carry forward loss relief in the end, because we are always trying to get the relief as early as possible, and as early as possible means that loss should be adjusted in the current year and the previous years. Moving on, it says claim must be made within 6 years of the end of the loss making period. Claim means that one has to tell HMRC that this is the time period during which we have to notify the HMRC. Then relief against total income, it says loss is adjusted against the total income of current year and then previous 12 months. Okay. In individuals, there was a cap on loss relief where the loss was adjusted against the total income. There is no restriction or there is no cap in corporation tax, right? Sometimes in the corporation tax questions, it writes cap, but in corporation tax, cap generally means chargeable accounting period. So make this thing clear that this cap is not the cap we studied in the income tax trading losses. Okay. So I think we have discussed the total income loss relief. That loss will first adjusted against the total income of the current year and then the total income of the previous 12 months. But again, it says if the previous accounting period is less than 12 months, then loss is adjusted on the time portion basis. For example, in the question, it says that a company has made a loss for the year ended 30th June 2016. But the previous period was for 3 months. So we will be adjusting the loss against that 3 months period, and then we will also be adjusting the loss against the previous 9 months from previous that 3 months period, right? So it will be adjusted on the time portion basis. Moving on to the last relief, that is the terminal loss relief. Okay, I have a question. Is there any restriction to prevent wastage of QCDs? Okay, I have a question from Mispa. Explain cap point, please. Mispa, we discussed cap on loss relief yesterday in income tax, that when the loss is being adjusted against the total income, then there was a restriction known as cap on loss relief. There is no such thing in corporation tax. Generally, in corporation tax, if it refers to the cap thing, then the cap means chargeable accounting period, right? There is no restriction in corporation tax for the loss to be adjusted, right? Okay, then I have a question from Idrissa. Is there any restriction to prevent wastage of QCDs on the carry forward loss leave? No, there is no restriction on that. You have to, because we are going to be adjusting the loss against total income, and total income is before the calculation or before the deduction, or you can say before the deduction of QCDs, right? Okay, talking about the last relief, that is the terminal loss relief. In terminal loss relief, it says a special terminal loss relief is provided under section S39 CTA 2010. Now that is the section of Corporation Tax Act which was published in 2010. You don't have to write up the section name. It says it permits 12 months loss to be adjusted against the total income of the succession year. Now, loss has to be adjusted against the total income of the year of succession first. Any remaining loss is then carried back against total income on LIFO basis for the previous 3 years. So, in the case of succession year, loss is first adjusted against the total income of year of succession and then carried back against the previous 3 years total income on LIFO basis. The bases are same as discussed in the individuals, but in individuals, loss was being adjusted against the trading profits only. But here, the loss will be adjusted against the total income. Okay, guys, I think I have made you all clear about how a company can relieve its trading loss. Moving on to self-assessment. Now, self-assessment was also covered in individuals, but that was how the individual has to pay tax. Here we are going to discuss that how companies are going to pay tax, right? So if we talk about companies, firstly we'll be discussing about the IXBRL. Now this IXBRL has been tested by examiner several times. So there are some few points and I am going to highlight these all. You just have to memorize all these points, and if question asks you about IXBRL, you just can write up all these points and you can score marks obviously. So it says IXBRL, inline extensive business reporting language, is a global format for exchanging business information in electronic format. Integrated software applications automatically insert IXBRL tags to data and procedures and produce accounts and computations. Managed tagging services, a service provided by agents whereby the company outsources the process of applying appropriate IXBRL tags to each item of data, which then converts non-IXBRL accounts and computations into the required format. Like managed tagging services means that you will be putting up your information in that software, and then that software will be converting the information in the format required by the government, by HMRC. Then conversion software application, it says that allow the company to apply appropriate XBRL tags to each item of data itself to convert the accounts and computation into the required format. So this was the theory about IXBRL. You just have to recall, or you just have to keep all these 3 points in mind. Moving on to corporation tax payment. We discussed in the start that if a company is large company was the company having augmented profit of more than 1500,000. If a company is large, then it has to pay corporation tax in 4 installments. Now, what it says about the 4 installment thing, it says large company augmented profit limit more than 15,000 are required to pay in 4 installments. Installments are due on 14th day of 7th and 10th month of the current accounting period and 1st and 4th month of the next accounting period. 4 installments, month 7 and month 10 of current accounting period, month 1 and month 4 of the next accounting period, and the date is fixed, that is 14th of each the relevant month. It says a large company has estimated its corporation tax liability for the year ending 31st December 2019 at 800,000. Now this is an example. On return submission, that is on 31st December 2020, the company find out that the actual tax liability for the year ended 31st December 2019 is 1100,000. The estimate was 800,000, but the actual payment was now 1100,000. So what it says, the payment on accounts, the first payment was on 14 July 2019, again 200,000. Second payment was made on 14th October 2019, 200,000. Then 14th January 2020, 200,000. 14th April 2020, 200,000. Now these were the payments that has to be made by the company. But if there is an under or overpayment, that will be made when the company will be submitting the return, and the return of a company is submitted after 12 months of the end of the accounting period. So the accounting period ended on 31st December 19, but the return was submitted on 31st December 2019. And along with the return, the company will be making the rest of the payment, that is the payment of 300,000, right? But again, the installment thing is only for large companies. And even the large company is not eligible, or you can say is not required to pay an installment if it has become large for the first time. But if the company will be large in the second year as well, then in that case it has to pay corporation tax in installments. For companies, the payment of corporation tax is normally made within 9 months. It says 9 months and 1 days. For example, if I have a company and the year end of the company is 31st December 2020, and it is a small company, then it means that I have to pay corporation tax by 1st October 2021. That is 9 months and 1 day after the end of accounting period. That would be the due date for payment. But again, it says a large company is not liable to pay its corporation tax by installments if it was not large in the previous accounting period, as we discussed it, unless its taxable profits for the current accounting period exceeds 10 million pounds. Like if the profits are more than 10 million pounds, yes, the company has to pay corporation tax in installments, even if it is large for the first time. Then it says interest will be charged on underpayments, but such interest will be tax deductible. Oh, that's a different point. Yesterday in income tax, we discussed that if we have made an underpayment, and for that, if we are paying an interest that was not allowed expense in the company, it said you can deduct it from your trading profit. Then, similarly, overpayments will attract interest payable by HMRC, and this will be taxable. Now, this is a bit different from income tax. In income tax, we discussed that if an individual is making the payment late, he has to pay interest, and that interest is not allowed to be deducted from the trading profits. And similarly, if an individual has made an overpayment, he will be getting an interest from HMRC at the rate of 0.5%, but that interest was not a taxable income. But in the case of company, it is opposite. If you have received interest from HMRC, it is your taxable income for the company. And if the company has paid interest, that interest is tax deductible. Okay. Then again, we have all the theory things like the interest, when and how much interest is due, notification of chargeability, etc., etc., self-assessment, the penalties thing, again, the penalties for according to the taxpayer behaviors, the amendment to the return, the records to be kept by the companies, the inquiry procedures, interest from auditing returns, from the information from the return, and etc., etc. These are all theoretical areas, and you should be reading them from the notes I have provided and from the book as well, obviously, because book reading is necessary in order to pass the exam. Okay, so any questions till now? Okay, I have a question from Hasnan. He says, sir, please explain augmented profits. Okay, Hasnan, augmented profits are basically the one which will be deciding that whether a company is a large or small. We can calculate the augmented profits by adding the non-group dividend to the taxable total profits. Remember that corporation tax percentage has to be applied on taxable total profits, but that profit is not the one which will be deciding that whether a company is large or small if there are dividends received from non-group companies, right? But if there are no dividends, then obviously the taxable total profits is the augmented profit, and you can see by looking at the augmented profit that whether the augmented profit or the taxable profit, which is the same if the company has not received a dividend, that whether a company is large or small. Moving on, I am going to discuss group companies. Okay, Miss Bai, there is a question from you. I didn't get the calculation of installment payment. Okay, I'm going back on that so that you can see that in detail. Okay, here we made an example that for the tax year, for the accounting period ended 31st December 2019, the company has a tax liability of 800,000 estimated tax liability that has to be paid in four installments. That was due on the month 7 and month 10 of the current accounting period. So month 7 was July 19 and October 19, and then month 4 1 and 4 of the next accounting period, that is 1st January 2020 and 14th April 2020. So we divided this expected liability into four parts, that is 200,000 payment for each date, right? So this means that for the year ended 31st December 2019, the company has paid 800,000. But when the return was submitted, it was found that the actual liability should have been 1100,000. Now, out of this 1100,000, the company has already paid 800,000. So this means that when the return will be submitted, that is after the 12 months of the end of accounting period, that is 30, the date it would be 31st December 2020, the company has to make the rest of the payment. Similarly, if the company has paid more, then the company can claim it back. Okay. Hopefully, I have answered your question. Okay, there's a question from Aisha. If the company, I lost your question. If the company has submitted more than what was expected, then obviously if the company has submitted more tax, then the company can claim the refund from the HMRC, right? Then we have a question from Idrisa. If the app is less than accounting period is less than 12 months, how do we make the payment for matrimony? Yeah, that's a good question, and thank you for reminding me that. Like if the accounting period is for like 9 months, then obviously we cannot make four installments because there is no month 10 in the current accounting period, right? So then in that case we'll be making three payments. And if the current accounting period is for 6 months, then we will be making two installment payments. That would be in the month 4 and month 1 of the next accounting period. Thank you, Drisha, for reminding me this. Is it called the balancing payment? And even though, yeah, Aisha, you're right, the payment will be which will be made with the tax return is definitely the balancing payment. Okay, again, so loss claim different between individual and company. Yes, Jakarta, I think you have joined late. There is a bit difference between the individuals and the companies. We just have covered this thing. Okay, Dipali, I got your question, sir. I'm not able to click on the link. Okay, guys, again, I am going to write my contact number in the chat section so that you can text me up for the WhatsApp group. I am Suleiman Khan, if anyone don't know my name. So you guys can text me up on the WhatsApp so I can add you up in the WhatsApp group, which I have made for you guys. Okay, so let's move on the group companies thing. Again, I know I'm going through these things fairly quickly, but again, by the guidelines of ACCA, I was not required to do this revision thing. I just was to have to, I was required to do the practice thing more. So I will be focusing on that thing and just have to go through the group companies thing so that we are done with the revision of corporation tax, like, and then we'll be focusing on the question. Okay, let's get started. It says associated companies. In tax, subsidiary is called associated company. Subsidiary was one in which we had ownership of more than 50%, right? So if we have two subsidiaries, then this means that in group there are total three companies. And the limit, which was deciding that whether a company is large or small, with limit has to be divided on the group number of group companies. Like if I have two subsidiaries, then there are total three companies in the group, the parent and two subsidiaries. So the limit will be divided on three. It gives me the figure of 500,000. Now, if a company in the group has a profit more than 500,000, that company would be considered large. So it is all written down here. And again, dividends received from the group companies are not included in calculating the augmented profits. The main thing I want to discuss is 75% group relief group. Now, in this 75% group relief group, the companies which are having a 75% of relationship between them, whether it is a subsidiary or it is a subsidiary of subsidiary, like it is a sub subsidiary, you have to have an effective interest rate of 75% for the subsidiary and 75% for the sub subsidiary as well. If the companies are in a 75% group, they can transfer trading losses between each other. They can also transfer property business losses and unrelieved gift aid, the qualifying charitable donations between each other, right? So this gives the company a better opportunity to relieve their losses so that they can reduce their tax liabilities, right? Again, in the 75% group relief group, companies forming the 75 group can transfer trading losses, property losses, and unrelieved gift aid losses or the qualifying charitable donations between each other, right? You guys can read the theory, the requirements. From here, I just have given you guys a crux of this relief. Okay, we discussed that under the 75% group relief, the companies can transfer trading losses, property losses, and qualifying charitable donation, which are unrelieved between each other, but not the capital gains. Because for capital gains or capital losses, there's another group that is called 75% capital gains group. According to this group, companies can transfer assets between each other at nil gain, nil loss. We discussed that on the first day, that treatment was between the spouses, right? Like husband and wife can transfer assets between each other at nil gain, nil loss. Same is the case for company. The companies can also transfer assets to each other at nil gain, nil loss. And nil gain, nil loss means that it there will be no corporation tax implication on such transfer between the inter 75% group companies. By 75% means that the ownership or the relationship should be 75% or more. But in the case of sub subsidiaries, especially for 75% capital gains group, the relationship between the parent and the sub subsidiary should be 50%. It should not be 75%, right? Okay. Assets are transferred at nil gain, nil loss. It said assets are transferred at cost plus indexation allowance. Obviously, the inflated cost and indexation allowance has to be applied till 31st December 2017, not more than that period. Okay. And it said it is a notional transfer. By notional transfer, it means it is assumed transfer. The transfer is not actually done. So there can be some advantages. If we talk about that, here are some advantages. It says actual transfer is not done, so administrative and legal costs are saved. Obviously, asset is not moving from one premises to another, so the administrative, the transfer cost is saved, and also the legal cost is also saved. Right. Then it says election must be made within 2 years. By election, it means that the company has to inform HMRC that the asset has been transferred from one company to another 75% capital gains group company at nil gain, nil loss. But that has to be done within the 2 years after the end of the accounting period. So, for the transfer of trading losses, companies can use 75% group relief. But for the transfer of assets, the company can use 75% capital gains group. Remember, assets can be transferred between 75% group companies, not the uh, gains or the losses. For example, if one company has realized a loss and then the other group company has realized a gain, they cannot transfer the gain or they cannot transfer the loss to each other. Instead, they will be claiming that before the transfer, asset was sold to that company, and that one company has sold both assets, realizing a gain on one and realizing a gain on the other, and then that company can offset gains against each other because that both gains will be considered the gains of one company. Further, we have group rollover relief. We discussed that on Monday, on the first day of the webinar, that if an individual sells an asset and buys another asset using the proceeds of the old asset, then the gain can be rolled over. Same thing can be done between the group companies, the 75% group companies. If one company has sold an asset and another company has purchased, then a rollover election relief can be done. So students, this was a very brief revision of corporation tax. Okay. Shweta, I have sent my number in the chat. I have sent my number in chat. Please confirm me whether you can see my number. If you cannot see my number, I can also show that number on the screen. Okay, so I think it's time to be moving on the questions. And the first question I want to do is from the Kaplan exam kit. The question number is question number 257. It is named e-commerce. Actually, this question was not in my plan, but yesterday in the WhatsApp group, many of the students were confused in this question. So I thought that I should be discussing this question with you so that you guys can get a clear idea of what you should be doing in this part, right? Okay, so I think let's get started. It's 4:56, so we have plenty of time and we can do lots of questions in the remaining time. So I think let's get started. Again, this question is the last question of the exam. It is always the last question, corporation tax, and it carries 15 marks. And 15 marks, it by 15 marks, this means we have 27 minutes. We will be trying to solve this question in a time less than 27 minutes, so we can solve more questions. Going through the requirements, it says prepare a revised version of corporation tax of e-commerce PLC corporation tax computation for the year ended 31st March 2020. Now the year end is 31st March 2020, and by year end it means that it is a period of 12 months and it is aligned with the financial year. Then it says after making any necessary corrections arising from your colleague's query. Note again, very important. Your calculation should commence with the operating profit figure of 212,300, and you should indicate by the use of zero any item referred to in query 1 to query 5 which do not require adjustment. Now that is requirement A. Moving on to requirement B, it said explain again a theory part, and that is for 3 marks, right? Explain why e-commerce PLC will not have been required to make quarterly installment payments in respect of the corporation tax liability for the year ended 31st March 2020, but will have to do so for the year ended 31st March 2020. Guys, we discussed this thing just now, that if a company has become large for the first time, it do not have to pay the corporation tax in installments. But if it is becoming large in the second year, yes, it has to pay corporation tax in installments. So what I will be doing it, I would be opening up an Excel sheet. For half enough screen. So that I can see the question and the answer as well. Okay, so these were the questions we are done. So I'm renaming the sheet with the question name, that is e-commerce. Starting with requirement A, I have to calculate, or rather I have to prepare revised corporation tax computation for the year ended 31st March 2020. Guys, again, keep this thing in mind that you have to work on your presentation, because if your presentation is not good, then it do not gives a good impression to the examiner. So the note said that your computation should start with the operating profit figure of 212,300. So I'm going to write the operating profit. Operating profit, that is 212,300. Sorry, 210,2,300. And again, I'm going to apply the pound sign. Okay, let's move back to the question scenario so that I can be solving this question. Okay, operating profit note 1. Let's also go to the requirement. It said you are a trainee chartered certified accountant and your firm has recently completed its audit of e-commerce PLC's financial statements for the year ended 31st March 2020. The company runs an internet based business. E-commerce PLC has prepared its own computation. Now, the company has prepared its own computation. So whenever there is a case, just keep this thing in mind that there are going to be mistakes in this computation. So it said for the year ended 31st March 2020 and your colleague has completed your firm's tax audit of these figures. E-commerce PLC's original computation along with references to your colleague's query is as follows. There are some items which have been written here. Now this is the corporation tax computation for e-commerce PLC. I can see the operating profit, deduction for lease premium, capital allowances, then trading profits, then property income, then loan interest receivable. Okay, so loan interest receivable, you have to include the receivable here. You don't have to include the interest received, right? Then total profits and then corporation tax. Then it says your colleague has raised some queries in regard to e-commerce PLC corporation tax computation. Apart from any correction arising from your colleague's query, the corporation tax computation prepared by e-commerce PLT does not contain any error. So this means that only the issues related to these queries are required adjustment. The rest are all correct. Let's see query one. In query one, I know the query is related to operating profit. So what it says e-commerce PLC has treated all of the legal expenditure as allowable. And I know that not all legal expenditure is allowed when calculating its operating profit. However, legal expenses include number one, legal fees of 80,200 in connection with the issue of shares. Now, the legal fees which has been paid in connection with the issue of shares is always disallowed. So I will be adding that back. I'll be writing legal fee first. That's the heading, and then share issue. Right? I will be making this thing bold by Control B. So I'll be adding back 80,200. Then it said legal fees in connection with the issue of loan notes. The legal fees in connection with the issue of loan notes is only allowed if the loan notes are issued to finance the trading activities, right? Then it said the loan notes were used to finance the trading activities. So that is allowed. So I would be writing it loan note, the heading is up, legal fee. So that's zero because it is allowed and has been deducted. Then it said legal fees of 14,900 in connection with the renewal of a 99-year lease of the property. Now 99-year lease is not a short lease, that's a long lease. And long lease renewal is not allowed. Short lease renewal is allowed. I said renewal of long lease. That's disallowed and I have to add it back and the amount is 14,900. Then it said legal fees of 4,700 in connection with an action brought against a supplier for breach of contract. Now that is something for the business that is allowed. So legal fees, I am writing action against supplier. That's zero because it has been deducted and it's allowed. Then it said legal fee of 5,800 in connection with the registration of trademark. Obviously, that is also allowed. So trademark registration is allowed. So no adjustment, zero. So guys, we are done with the query one. Let's see what query two relates to. Query two is related to deduction of lease premium. Let's see what it says. It said the amount assessed on the landlord has been correctly calculated, but the life of the lease should have been 15 years and not the 12 years used by e-commerce PLC. The lease commenced on 1st April 2019. So this means that the lease deduction, this amount, has been divided by 12, but instead it should have been divided it by, they should have been divided it by 15. So what I will be doing is I just have to make adjustment. Deduction for lease. Let's see. I would be writing is equal to minus brackets. The amount in the computation, I can see that it's 14,400 multiplied by 12 because it was divided by 12 initially. By multiplying it by 12, I will be getting the original amount of the taxable lease premium, and then I have to divide it by the actual life that was 15 years. So 14,400 into 12 by 15, and I have applied brackets and minus sign in the first place. So the correct amount is 11,520. Moving on, the third note related to capital allowances. Okay, sorry, I just scrolled it up. Capital losses and the amount of capital losses we are given is 209,200. So what I'll be doing, I'll be writing this as a working number one. capital allowances. Why I'm doing the working? Because I want the examiner to get a good feeling by just having a look at my script. Okay, so the capital losses figure was 209,200. Let's see what it says. It says there are two issues here. Okay, so there is no need to prepare the computation for the capital allowances. So what I'll be doing, I will be writing the given allowances, and those were 209,200. I remember the amount. It says number one, e-commerce PLC has purchased 4 motor cars during the year ended 31st March 2020, and all 4 motor cars have been included in the plant and machinery main pool. Now that is something which is not allowed by HMRC. Cars are separated according to their CO2 emission. I can see that the first car has CO2 emission of 102 grams, so they have done it right by adding them in the main pool. The second car is 104 again. It is also correct to write it in the main pool. But the third car was 245 grams. Third car had a CO2 emission of 35 grams. So this means that this car should have been included in the special rate pool, and a capital allowance of 6% should have been applied on this. But they have added it in the main pool, and the capital allowance applied on this car has been 18%. So this means that 12% extra allowance has been given. Now I have to deduct that allowance from this capital allowances amount. How I'll be doing it? Let's see. Then motor car 4 is 43 grams. It is a low emission car, so there was a first year allowance at the rate of 100% on the car, and we have just given 18% allowance. So we have to add 82% of the remaining allowance to this amount, right? So I will be writing motor car 1, motor car 1, and as that has no adjustment, I'll be writing 0. Then motor car 2, again that has no adjustment, so again 0. Motor car 3, I have to deduct the extra 12% allowance, right? So the allowance, the cost of the car is 51,750. So I'll be writing is equal to minus brackets 51750 into 0.12, because 12% has been given extra. So I will be deducting that. Then on motor car 4, I have to apply 82% extra allowance. Motor car 4 is equal to 19800 into 0.82. That's because the car was eligible for first year allowance at the rate of 100%, but only 18% of that was given. So what I'll be doing is I would be adding 82% allowance to this capital allowances amount. So I am done with the first issue here. Hopefully everyone is clear with this. Why? Okay, I have a question. Is putting pound sign necessary? Yes, Mispa. I told that yesterday and day before yesterday and day before that, that putting a pound sign is very important. You have to show your currency, right? Okay. And another question from Misba is that why we have added back the lease amount. And basically, the lease deduction has to be deducted from the trading profits, right? And we are going to calculate the trading profits. It said in the question that the lease deduction has been calculated by dividing the taxable lease premium over 12, but it should have been divided it over 15 years. So what I did is I took the amount given in the question, which was originally divided on 12. So I multiplied it with 12 so that I can get the original amount for the taxable lease premium. And then I divided that by the original life, that was 15 years, right? So Mispa, I think I have answered your question. Okay, again, I have a question from Idrisa. Explain the 12% deduction. Okay, ma'am, basically the motor car 3 should have been in the special rate pool. And on the special rate pool, the rate of capital allowances is 6%. But the car has been included in the main pool where 18% allowance has given on this car. So what we are doing is we are deducting the extra 12% allowance which has been given on this car. So what we did is we deducted like is equal to minus, we took the cost of the car and multiplied it by 12%, right? Okay. So no long-term lease amount. Mispa, sorry, I didn't got your point. Okay, there is a very good question from Mohammed Haris. He said, in corporation tax, personal use of car is ignored. Yes, Haris, you are Absolutely right. If there has been a personal use of the car, you have to ignore that. I think, Haris, you have a good grip on your topic, and thank you for reminding me that. Ms. Please clarify your question. I'm moving forward and waiting for your question. Okay, I got your question. Renewal of lease amount should, that is 49, should not be added, shouldn't be added back. No, 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 no. You are wrong in saying that. The amount for lease deduction is an allowed expense. You can deduct that, right? From the lease. From the lease part, we studied that yesterday and we revised it today as well, right? So for lessee, we have an annual deduction which has to be calculated by dividing the taxable lease premium by the over the lease term. The lease term in this question, the lease term was taken incorrect. So we multiplied it with the incorrect amount. So we got the original amount. That was the correct amount for the taxable lease premium and divided it over the actual lease life that was 15 years. Hopefully you are now clear. Okay, let's move to the second issue in the capital allowances part. It said 4 years ago, e-commerce PLC purchased a computer equipment on which a short life asset election has been made. So short life asset, now that's an interesting thing. And we discussed that for every short life asset, we have to make a separate column because this is a short life asset, not a pool. And if a short life asset is disposed in a year, in any year, we have to calculate the balancing allowance or the balancing charge on that short life asset. But balancing allowance and the balancing charge can only be calculated on the main pool or the special rate pool in the year of cessation, not other than that. Okay, let's see what it says. It said over 4 years ago, e-commerce PLC purchased a computer equipment on a short life asset election has been made. For the year ended 31st March 2020, the writing down allowance claimed on the equipment was 1512, calculated at the rate of 18%. Now the allowance calculated has been the amount of allowance which is 1512. This amount has been calculated by multiplying whatever the amount with 18%. So this is 1512 is 18%. However, the computer equipment was actually scrapped with nil proceeds. So this means that there was a loss. And there should have been a balancing allowance equal to the tax written down value of the asset. But they have applied 18%. So this means that again we have to add the remaining 82% here. So what we are going to do is I would be writing uh, short life asset. I'm taking the amount as 1512 multiplied by 12 multiply by 82 divided by 18. So here I got the extra allowance which should have been included. So making a sum of all of these, here I got the amount for capital allowances. Now I have to deduct this from the trading profits. So what I will be doing is I will be linking the cells by applying a minus sign because the amount of capital allowances is written as positive. So equals to minus and this. Making a total of all of these here. Here we got the trading profit. And in trading profit, we'll be adjusting the property income and loan interest receivable. Let's go to the property income note. Here it said again, there are two issues here. E-commerce PLC has claimed a deduction for repairs of 95,300 in respect of the warehouse which has been purchased on 21st May 2019. The warehouse was purchased in a dilapidated state and could not be let until the repairs were carried out. This fact was represented by the reduced purchase price. So this means that these repairs are not allowed. So I'm just gonna take the property income amount from the question. Here I'm making working number 2, property income, pound sign. The amount given in the question is 156,700, and I'll be adding back the repairs. The amount of repairs was yeah, it's 95,300. So I'm adding these back because these are not allowed. Then in the next point, it said e-commerce PLC does not receive a rent due of 16,200 in respect of the warehouse for the quarter ended 31st May 2020 until 1st April 2020. None of the amount has been taken into account in calculating the property business profit? So we discussed that in corporation tax, property income has to be calculated on accrual basis. So we have to calculate the rent for the month of March, because the quarter ended on May. So it was May, April, and March, and we have to include the rent for March because that is our income on accrual basis. So rent not included, that is basically is equal to 16,200 into 1 by 3. Now that's 5,400. So when I make a total of these, I get the adjusted property income. I am taking this to the main format, copy, paste, and then linking the cells. Here we go. Then again, last query number 5, it said the accrual at 31st March calculated was 4,800, but it should have been 3,500. So the closing accrual is always added in the interest receivable. So they have added 4,200, but the actual amount should have been 3,500. So I would be deducting the extra amount added in the loan interest receivable. I would be writing investment income instead. The investment income given in the question is 42,400, and I will be deducting the extra 700 which has been included as closing accrual. So the actual amount for the investment income is 41,700. Oh, sorry, I have deducted the wrong amount. That was 1,300. And how 1,300 is calculated? That's the difference between the amount which has been included and which should have been included. Okay, by making a total of the trading profits, property income, and investment income, here I got the total income. And as I can see in the question, there is no qualifying charitable donation, so I can call it taxable total profits. And corporation tax rate is 19%. So if I multiply this with 19%, that is 0.19, here I got the corporation tax amount. That was the requirement number A. So I can see that the trading profit or the you can say the taxable total profit is more than 1,500,000. But in the question part B, it said that the company is not making installment payments. So let's see what it says. We got some other information as well. In other information, it said that for the year ended 31st March 2019, e-commerce PLC has augmented profits of 1,360,000, which is less than the limit of 1.5 million, and has forecast that its augmented profit for the year ended 31st March 2020 will exceed 2 million. So this means that this is the year ended 31st March 20 is the first year in which the company has become large. So company is not required to make installment payments. But again, it said that in the next year, the profits will again exceed 2 million. So in the next year, it has to pay corporation tax and installment. What I will be writing is that I will be writing some theory on it, a theory for like 2 or 3 lines that carried 3 marks. So I will be writing large companies are required to make installment payments if they are large for the second time. So I have just written a rule like then next I would be writing that e-commerce PLC has become large for the first time in the year ended 31st March 2020. It do not have to make installment payment in the current year. But in the next year, it is forecasted that the profits will again exceed GBP 2 million. GBP is for pound. So it will then have to pay the corporation tax in installments. That's it. So here I have written some good 3-4 points, and these marks are for like 3 marks. Okay. So guys, it's 5:21, and exactly in 27 minutes we are done with this question. Not 27 minutes. We started this question at 4:56, and it's 5:21. Yes, I can repeat the calculation for rent received. It's like the rent for the quarter was 16,200, and you have to include the rent for 1 month. That's 1 by 3. The quarter end was 31st May. So May, April, and March is in your current year. So on accrual basis, you have to include the rent in that. Okay, I have a question from Shafiullah Azad. Can you explain what does personal use is basically when the car is being used by the individuals for fulfilling the needs of their families, not for the business, right? That's the personal use. In individual, the personal use was disallowed, and we were adding that back. Or in the case of capital allowances, we were basically uh, portioning the capital allowances according to the business use, but there is no such thing in corporation tax. Okay, students, so we are done with this question. Let's do one more question, and then we'll be taking a break. The next question we are going to do is from practice test on available on your ACCA website. That is practice test 1, and that's question number 34 of it. That again is a question from corporation tax. Let's see what it says. I'll be quick in doing that so that we can get a good 10 minutes break for the tea. It definitely need that tea. Okay, so let's go through the requirement. It says calculate 10th limited taxable total profit for the 4-month period ended 31st July 2019. So the period will end on 31st July 2019, and it's a 4-month period. By telling that this is a 4-month period, it means that if there are capital allowances, those capital allowances will also be calculated for 4 months. Like if, after applying the percentage for the WDA, like 18% or 6%, you have to time portion that amount. Okay, let's see what it says. This scenario relates to the two requirements. Obviously, I know that is requirement A and for 7 marks, and corporation taxes for like 15 marks. So I have to make another requirement as well. So it says Mabel is a serial entrepreneur, regularly starting and disposing of businesses. On 31st July 2019, 10th Limited, a company owned by Mabel, ceased trading. So 10th Limited is the case of cessation. I might have to apply the terminal loss relief in that. So let's see what it says. Then it said on 1st October 19, 11th Limited, another company owned by Mabel, commenced trading. So Mabel was an entrepreneur. She closed one company and started another. So again, cessation and starting. So let's see. Okay, and again in the year of cessation, there are no capital allowances. Instead, there are balancing allowances and balancing charges. So let's see. It said the following information is available. 10th Limited, for 10th Limited, it said for the final 4 months period of trading, 10th Limited has a tax adjusted trading profit of 52,400. Okay. And it said this figure is before taking account of the capital losses. So what I will be doing is requirement A, sorry, requirement A, I have to calculate the taxable total profit of 10th Limited. So I will be inserting a pound sign, clicking on this 000, custom currency, changing the dollar to pound. Okay, 0, enter. So I'll be writing the trading profit, and the trading profit amounts to 52,400. Then in note 2 it said on 1st April 2019, that was the start of the year, the tax returned on value of the company's main pool was 12,400. On 30th June 2019, 10th Limited purchased a laptop computer for 1800. Now AIA is also not available on the purchase of this laptop because this is a year of cessation. Then it said on 31st July 2019, the company sold all the items included in the main pool at the start of the period for 28,200 and the laptop computer for 1300. None of the items included in the main pool were sold for more than its cost. So what I will be doing is I will be preparing a small working for capital allowances. Working 1, capital allowances. I will be making a main pool, a description and main pool description, and the other column will be for main pool. I don't have to make a column for AIA or special pool because there are none, and the last column will be for capital allowances. The brought down balance is from the main pool is 12,400. Additions, that is laptop for 1800, and then disposals, like disposals include is equal to minus bracket the laptop. It was retained by Mabel itself, that was for 1300, plus the other assets were sold for 28,200. So making a total, the total disposal was 29,500, making a sum is equal to sum bracket arrow key up and selecting them bracket close. So I am getting a profit, that's WDV. WDV stands for return on value, and if I'm getting a profit, I'll be having a balancing allowance on this profit, which is equal to the amount of profit is equal to minus this. So balancing allowance basically increases trading profits. Balancing charge basically is equal to, and I will be linking that cell up. That's it. Okay, then in note 3 it said on 31st July 2019, 10th Limited sold a company's freehold office building for 180,300. The building was purchased on 3rd May 2014 for 151,334 and its index cost to 31st December 17 was 164,500. So that would be relevant to gain. Then it said during the 4-month period, during the 4-month period to 31st July 2000, note 4, I just skipped it. During the 4-month period ended 31st July 2019, 10th Limited let out floor, okay, that's property income, and in note 5 it said qualifying charitable donation. So let me make a total of trading profits here is equal to sum arrow key up, selecting them both, close. That is my trading profit. Now you can say tax adjusted trading profit. Then I have to include the property income here. I have to do some calculation for that, but before that I would be writing chargeable gains. The building was sold for 180,300 and the index cost was 164,500. So I would be deducting the index cost so that I can get indexed gain, that is 15800. Okay, let's make another working for property income. That's working number 2. I'll be solving and reading the things side by side so that I can save time. Paste, pound sign, paste. Okay, let's see. Now it says during the 4-month period ended 31st July 19, 10th Limited let out one of its floor freehold office building which was surplus to the building requirement, business requirement. The floor was rented at 1200 per month. So first of all, I'll be writing the amount for rent accrual basis. So 1200 into 4 because the period is for 4 months. Then it said, but the tenant left owing the rent for July. So the rent for July would be a bad debt, right? You can also write impairment loss, but I am comfortable to write it as bad debt minus 1200. That was the rent for 1 month. Then it said the total running cost of the building for the 4 month period ended were 36,300 and one third related to the lead floor. The other two-third of the running cost have been deducted in calculating the trading profit. Okay, so I have to deduct only 1/3 of this from the property income. So running cost is equal to minus brackets. The total cost was 6,300 into 1/3 because that is relevant to the lead floor. So making a total of this, here I get the property income. Copy, paste, and let's link it up in the corporation tax computation. Moving on, I'll be making a total of the trading profit, property income, and gains so that I can get the total income, and that's 85,000. From the total income, we have seen that we have to deduct the qualifying charitable donation. Qualifying charitable donation, and that is for 800 pounds. When I deducted that and made a sum, that gave me a figure for taxable total profit, right? So I think I am done here with my requirement number A. Moving on to requirement number B. 10th Limited is about to cease trade. Exactly. See, you're right. Balancing charge will appear and it will be added in the profits. Exactly. Yes, you are exactly right. Okay, Hasib, you have written that I have done a mistake. I don't know what you're talking about. We cannot calculate WDA. We have not calculated WDA. It's WDV. WDV stands for written down value. Written down value is basically the total from opening and up till disposals, right? On this is the amount on which the allowances, the WDA will be applied, right? Okay, there's a question from Shafila. Sorry to interrupt. I can access the text portal. Can I get any suggestion, please? Shafila, I don't get your question. So please clarify your question so that I can be of some help. Okay. So moving on to the next requirement. Meanwhile, you guys can send me the questions. Okay. So it said in requirement B, and that's for 8 marks, it said calculate. So I'm good. I am I am like in the air that I have got calculation, not theory. It said calculate 11th Limited's tax reduced trading profit for the 6 month period ended 31st March 2020. So I'll be writing requirement B here, B, and I know how to calculate the tax adjusted trading profit. Again, I have to insert the pound sign, so .00 custom currency dollar to pound. Okay, then 0 enter. Let's see what it says about 11th Limited. Here's the scenario about 11th Limited, and I know that 11th Limited started to trade on 1st October 2019. Let's see. It said 11th Limited operating profit for the 6 months period ended 31st March 2020 is 122,900. Now it's a 6 months period, so this means that again, if there will be capital allowances, that has to be for 6 months period. Okay. Depreciation of 2580 and amortization of lease property of 2000 have been deducted in arriving at this figure. So what I'll be writing is I'll be writing trading profits, which are given in the question, and these are 122,900. I will be adding back depreciation, and the amount for depreciation is 2580. Then I'll be adding back the amortization because amortization is also disallowed. Amortization is 2000, so I'll add it back. Then moving to note 2, it said On 2nd October 2019, 11th Limited acquired a leasehold property, paying a premium of 60,000 for the lease for the grant of 15-year lease. The office building was used for the business purpose by 11th Limited throughout the 6-month period ended 31st March 2020. So this means that 11th Limited has taken the property on lease. It has to deduct the annual lease premium. So annual lease deduction or annual lease uh, premium divided by lease term, that is how it is calculated. So I have to calculate is equal to minus brackets. The amount paid for the premium is 60,000 multiplied by again bracket 51 minus n. N is the number of years, that is 15 divided by 50. Now that is the amount for taxable lease premium. I have to divide this over the lease term, that is 15, and into 6 by 12. Obviously we have to time portion because our accounting period is not the full 12 months, it is 6 months. So the lease reduction is 1440. You can also calculate this in a working, but I am comfortable doing things here in a cell because I have done a lot of practice, and in the exam, on the exam day, I am prepared to do this thing in the cell. But again, I am doing this again to show you guys how this is done. Is equal to minus bracket 60,000, the amount for lease premium, multiply by 51 minus n, that is 15, brackets close, divided by 50 into, sorry, again brackets close, that is the amount for taxable lease premium divided by 15, that's the lease term. I'll be getting the annual lease deduction, but I need for 6 months, so 6 by 12, so again 1440. Moving on, let's see what it says. In the note 3 it said on 1st October 2019, 11th Limited purchased 2 motor cars. Okay, motor cars are purchased, so this means capital allowances. Okay, let's make a working number 1, capital allowances. Let's see what it says. The first motor car is for cost 12,600 and has a CO2 emission of 90 grams, so that car will be in the main pool. This motor car is used as a pool car by the company's employees. So again, for I'm telling this for the individuals as well. If the car is used as a pool car, that is always taken in the main pool, so keep that in mind, right? Then the second motor car costs 13,200 and has a CO2 emission of 40 grams, so this means that FY, the first year allowance, will be available in this car. This motor car is used by Mabel, and 45% of the mileage is for private journey. And in corporation tax, students, you have to ignore the private use. So what I am going to do is, firstly, I am going to make the column for description. Then obviously they have purchased the car, so won't be any AIA, but instead FYA, then main pool, and then capital allowances. There is no brought forward balance because the business has just yet started. Control C, Control V. So I'll be starting with additions. And motor car 1, that would be taken to the main pool. The cost of the motor car was 12,600. And then we have motor car 2. That motor car 2 will be taken to the FY column. Motor car 2 will be taken to the FY column. This cost is 13,200. Firstly, I will be applying the FYA at the rate of 100%. That's is equal to this amount. This is taken to the capital allowances, then linking up. Then I'm going to calculate WDA at the rate of 18% on the main pool. There was only one car, so is equals to minus this 12,600 into 0.18. That's 26. Oh, sorry. I haven't done the time apportionment. So into 6 by 12. Yeah, that's 1134. And again, I'm taking that in capital allowances. I made a sum of the main pool, and that gave me the TWDV carried forward. TWDV means tax returned on value. Then I will be making a total for capital allowances, and the total for capital allowances is 14334. What I will be linking here, I will be copying this and pasting it here, then linking the total for capital allowances. Okay, so I'm done with note number 1, 2, and 3. Let's see what note number 4 says. It said on 1st October 2019, Mabel made a loan of 100,000 to 11 Limited. So 11 Limited received the loan at an annual interest rate of 5%. This is a commercial rate of interest and no loan repayments were made during the year. And at 31st March 2019, loan was used to finance the trading activity. So this is a trading loan and interest has to be deducted from the trading profits as an allowed expense. So loan interest. Obviously, we are working this all on accrual basis. So even though the interest has not been paid, it still has to be deducted. Equals to minus brackets 100,000 into 0.05, that's the interest rate, into 6 by 12 time apportionment. Here we go. We have the amount for loan interest. Making a total gives me the amount of 109,206, and these are the tax adjusted trading profits. Let's copy and paste. So students, we are done with these questions, I guess, in 20 minutes. And you can also do them in the given time. Also do that in given time if you do a good amount of practice. After that, I will be extending the cells by double clicking on them if required. If you don't want to do that, leave it. Okay, yeah, Shafi, I got your question. You said I can't access ACCA practice platform by logging in my ACCA. Okay, I would be telling you after this, telling you this after the break, so that you know how to access the practice platform. Sir, okay, see where said this, sir, from where we can do this type of preparation as per the chapter wise. See, basically, you just have to read the book first so that you have the knowledge, you know what to do, what are the rules. And then afterwards, you have to do exam kit practice on a regular basis. So, what you have learned from the book can be applied in questions. And only by the application of questions, you will be remembering that thing, right? Okay, I have a question from Misbah. Show calculation of interest. Okay, ma'am, let's see. The loan was for 100,000. The interest was 5%, and we have to take the loan interest of 6 months. We are deducting it from the trading profits because the loan it said the loan was used to finance the trading activities, right? Yes, I can go over to capital allowances. Basically, the different thing I think you missed is the 6 by 12 thing. You have to time portion the capital allowances, right? Okay, Kohli. So guys, we are done with two long questions. Those are 15 marks question, and I think we should be having a break so that things don't get messed up. It's 5:43, so we are taking a break for 15 minutes, and we'll be back at 6. And again, at 6 o'clock, we will be doing some more questions. So it is my humble request to all of you to please join back at 6. Don't leave it. Don't rely on recordings. You cannot ask questions through the recordings. Instead, you can ask questions here. So I hope everyone is back at 6 o'clock. Till then, take some tea. Okay, guys, welcome back. So I hope everyone is back. And now we are going to move on the next area. The next area we are going to do from corporation tax is an MTQ, which is again from your practice test one, and that is related to CGT companies. And that obviously that is an MTQ, so it contains a scenario, and from that scenario you have to solve 5 questions. Out of those 5 questions, some of are related to the capital gains portion of the companies, and some are related to the capital gains of the individuals. So again, we are going to revise some things from that MTQ. So guys, I'm again going to switch off my camera so you don't have any internet issue. Okay, the question I'm going to do is from practice test, and that is an MTQ that is from section B. The number of that question is 21. So that's basically the second MTQ. Yeah, here it is. Now it says Kitten is a controlling shareholder in CAT Limited, an unquoted trading company. Okay. It has given us two scenarios. One scenario is related to CAT Limited, and the other scenario is related to Kitten. If I come to the requirement, it says what amount of indexation allowance will have been deducted in calculating the chargeable gain of 120,700 on the disposal of CAT Limited's factory. So I have to calculate the amount of indexation allowance. How indexation allowance is calculated? It is calculated by multiplying the relevant indexation factor with the allowable cost. Let's see what the scenario says. It says Kitten is a controlling shareholder in CAT Limited, an unquoted trading company. CAT Limited sold a freehold factory on 31st May 2019 for 364,000, which resulted in a chargeable gain of 120,700. The factory was purchased on 1st October 2005 for 136,800. And further capital improvements were immediately made at the cost of 23,400 during the month of purchase. So the cost of acquisition and the cost of improvement were both made in the same period. So we can use the same indexation factor. But again, whatever the factor is, it will be given in the question. Furthermore, it says further improvements to the factory were made during the month of disposal. The relevant indexation factor is 0.439. So if I have to calculate the indexation allowance, okay, I'm going to use a scratchpad for this. I will first be writing the allowable cost. Now that is the cost of purchase. That is 138,600, and then improvement. And the cost of improvement is 23400. So if I make a total of them, I'll get the total cost, and then I will be multiplying this with the indexation factor. Indexation factor given is 0.439. So let's calculate the total cost. Okay, okay, students, I'm going to use the on-screen calculator. Here I am using it. That's 138,600 plus 23400. The total cost is 162,000. Now I have to multiply this with the indexation factor, and I'll be getting the indexation allowance multiplied by 0.439. That was the relevant indexation factor given in the question, and the indexation allowance I will be using on this disposal will be 71118. So that's the answer. So if I go back, that's 7118. That is option C, I guess. So that is how we will be solving this question. So we are done with the first MTQ, first scenario from the MTQ. Let's move to the second part. Now it says if CAT Limited decides to purchase the freehold warehouse. Now it says CAT Limited. Now limited means company, right? So we are discussing the CGT for companies. It says if CAT Limited decides to purchase the freehold warehouse and makes a claim to roll over the chargeable gain on the factory under the rollover relief rules, what will be the base cost of the warehouse for chargeable gains purposes? Like I have to calculate the base cost. Okay, again I will be calculating that using the scratchpad. But again, let's move forward and read what the scenario says. It says CAT Limited is unsure how to invest in the proceeds from the sale of factory. The company is considering either purchasing a freehold warehouse for 272,000 or acquiring a leasehold office building for a 40 years lease for a premium of 370,000. If either investment is made, it will take place on 30 September 2020. And in the question it said if the company decides to purchase the warehouse. So if the warehouse is purchased, it will be purchased for 272,000. The factory was sold for 364,000 and the warehouse is purchased for 272,000. This means that not the full amount is being reinvested. So what I'll be doing is I will be writing up the disposal proceeds of the factory, and the disposal proceeds are 364,000. Then I will be deducting the cost. Sorry, I will be deducting the cost of the new warehouse, that is 272,000. So the amount not reinvested is the difference, and that amount is not rolled over from the gain. Like it would be the chargeable. So again, I'm using the on-screen calculator. 364,000 minus 272,000. The amount not reinvested is 92,000. So let's write it down here, 92,000. Now I also have to calculate the gain on the old factory, right? How that will be done? The disposal proceeds of the old factory was like I will be writing gain by disposal proceeds were 364,000. The cost of that factory was okay, guys. Sorry, I just lost my voice. Can you hear me clearly? Please do tell me. Can you hear me? Okay, thank you. Okay, Nadia, I have a question from your side. When I'm trying, not able to, is there any other link I can use? I've missed other webinars due to work. Okay, Nadia, I have shared my contact number in the chat. You can take the mobile number and you can send me a text on the WhatsApp, so I can add you to the WhatsApp group. There, I'll be answering your questions, right? Okay, so the disposal proceeds of the factory were 364,000. The cost was 162,000. I calculated that. Then again, I will be deducting the indexation allowance, that is 71118. So let's see what the gain is using this calculator. 364,000 minus 162,000. That gave me a gain of 202,000 minus 71118. The gain is okay. Sorry. I just skipped one information from question. They have already given the gain, that is 120,700. So I have to use this amount. Sorry. I just have to clear up the calculation. The gain in the given in the question is 120,700. Out of that gain, 92,000 cannot be used for rollover. The remaining would be rolled over, and that would be the difference. That is 120,000 minus 92,000. So the amount of the gain that can be rolled over is 28,700. Sorry, I have just clearing it up. 120,700 minus 92,000. Sometimes it is hard to use the on-screen calculator. So the gain to be rolled over is 87,000. The cost of the new warehouse is 72,000. So I'll be deducting the rollover gain, that is 28,700, and then I'll be getting the base cost of the new warehouse. That would be 272,000 minus 28,700. That give me a figure for 243,300. So that's basically the base cost of the new warehouse, and that is option A. I hope everyone is clear so far. Moving on to the next question. Here it says, if CAT Limited decides to acquire the leasehold office building and makes a claim to hold over the chargeable gain on the factory under the rollover relief rules, what is the latest date by which the held over gain will crystallize? Obviously, that is the 10 years from the date of uh, from the date when the reinvestment is made. That is 30th September 2020. So 10 years from 30th September 2020 is option D. That is the answer for this question. So these three questions were related to CAT Limited, and these were all CGT companies. Moving on to the next question, it says, what is the cost figure which will have been used in calculating the chargeable gains on Kitten's disposal? Now it does not say Kitten's Limited, so this means that Kitten is an individual, right? It is also stated in the question. Let's see what it says. Disposal of 20,000 ordinary shares. It says Kitten sold 20,000 ordinary shares in Cat Limited on 5th October 2020, which resulted in a chargeable gain of 142,200. The disposal qualified for entrepreneur relief. Okay, so if there is any chargeable gain, then it will be taxed at the rate of 10%. Obviously, that is entrepreneur relief. Then it says Kitten had originally subscribed for 90,000 shares in Cat Limited on 7 July 2010 at their par value, so the cost is also 90,000. On 20th September, 22nd September 2013, CAT Limited made 2 for 3 bonus issue. Kitten took up her allocation under the right issue in full by paying 6.4 for each of the new share issued. Kitten sold and Deek was okay. That is not related to this part of the question. Let's see what we can do. Okay, if we recall the matching rule for cost of shares for individual, that was the same day, then following 30 days, and then share pool. There was no acquisition on the same day. There was also not any acquisition in the following 30 days. So what we have to do, we have to make a share pool. Share pool. I don't have to use any format, right? So I will be writing the amounts. First, it bought 7 July 2010. It bought 90,000 shares, and the cost was also 90,000 pounds. Then on 22nd September 13, there was a right issue. I'm writing RI for right issue. That is for 2 for 3. So 90,000 divided by 3, that's 30,000 into 2, that's 60,000. So I can do simple calculations by myself, but I have to multiply it with 6.4. So I have to use calculator for that. So 60,000 into 6.4. The cost is 38,400. So the cost of these shares is 38,400. I'm writing in bracket at the rate of 6.4 so that you guys can know how I have made this calculation. Oh, sorry, the cost is 384,000. I just missed the zero. So the total of the number of shares is 150,000. And the total for cost is 384,000 plus 90,000. That's 474,000. Now Kitten has sold 20,000 shares, so I have to take the cost for 20,000 shares. Now how I can do that is by dividing 474,000 by 150,000 and multiplying it with the number of shares, that is 20,000. So let's see what it says. That's 474,000 divided by 150,000. That give me a cost per share of 3.16 multiplied by 20,000, and the cost figure is 63,200, and that's my answer. 63,200. Let's see what the option is. Option is option B. So moving on to the next question. Here it said the last question of the MTQ. That said, what is Kitten's capital gains tax liability for the tax in 1920? Okay, now I have to calculate the gain for Kitten. Kitten sold the shares for 142,000. We have calculated the cost. Okay, they have given us the gain. They asked for the cost, but they have given us the gain. So that's 142,200. But this qualified for entrepreneur relief. So again, that is available. Kitten also sold an antique vase on 16th January 2020, which resulted in a chargeable gain of 28,600. For the tax in 1920, Kitten had a taxable income of 12,000. So what I'll be doing is I will be using the scratchpad again. I know that Kitten has two gains, so I'll be making two columns, one for ER and other for no ER. ER means entrepreneur relief. So the gains with ER was 142,200 and the gain for no ER was 28,600. Now what I have to do is I have to deduct the annual exemption, that is 12,000 from the no ER gain. So minus 12,000, that will be giving me the taxable gain, TG. The taxable gain for ER is 142,200 and for no ER I have to calculate it using the calculator, which says that 28,600 minus 12,000, 28,600 minus 12,000, that's 16,600. Now I have to apply the tax rate. The tax rate for the ER is 10% and for no ER it would be 20% because the gains with ER have utilized the remaining limit, if any, was available after the deduction of 12,000, right? So again, we have to calculate tax on 142,200. The tax rate at the rate of 10%, the tax amount would be 142,220, 14220 actually, and then on 16,600 applied multiplied by 20%, that's 0.2, that's 3320. If we add both of them, like 3320 plus 14220, that gives me a total of, again, that is not showing the right amount, so I'll be clearing up the calculation. And again, 14220 plus 3320, that's 17540. That's the CGT liability, 17540 of Kitten. So let's see what the answer is. The answer is option D. So students, we are done with this question, this MTQ part. By having a look on this MTQ, you now know that you need to spend a good amount of time practicing these MCQs and especially the MTQs because they are a bit tougher part of the syllabus, right? And again, we managed to solve this in the given time. But again, you can only do this in the given time if you have done a good amount of practice. Okay, I have a question from Miss Ba. Explain question 2. Sure, ma'am. Just a second. The question 2 means question 26, I guess. 22, sorry. Okay, Miss Ba, in question 2, it said I have to calculate the base cost of the new warehouse, right? So, how I have done that, let's see this through in the scratchpad. The calculations are there. The new warehouse was purchased for 272,000 and the old was sold for 364,000. So this means that 92,000 of the proceeds have not been reinvested. And if the amounts have not been reinvested fully, the amount not reinvested cannot be rolled over. The gain was 120,000. So out of this gain, 92,000 cannot be rolled over. So the amount of gain which can be rolled over is 28,700. The cost of the new warehouse was 272,000, and if I deduct this 28,700 from the cost of the new warehouse, then I get the base cost, and the base cost would be 243,300. Agreed? I hope, Ms. Ba, I have cleared up your point. Okay, moving on to practice test 2, we have another question from corporation tax, and that's again for 15 marks. Here it says in requirement A, state giving reasons whether Rich Limited is resident or non-resident in the United Kingdom for the corporation tax purposes. Now that's for 1 mark, and I have to write up some theory. It says Rich Limited commenced trading on 1st August 2019, preparing its first accounts for the 8 month period ended 31st March 2020. Rich Limited is incorporated in UK, but its three directors are non-resident in the United Kingdom. Board meetings are always held overseas. It doesn't matter where the board meetings are held if the company is incorporated in UK, because in the start of today's webinar, we discussed that a company is UK resident if it is incorporated in UK or under the UK law, or if it is not incorporated in UK, but the major meetings are held in UK. So the company is incorporated in UK, so this means that the company is the UK resident company. But I have to write something up. So what I would be writing is that companies which are incorporated in UK, such as Rich Limited, are resident in the UK regardless of where central management and control is exercised from. So I think that's enough for 1 mark, and I'm done with this part of the question. So out of 15, I'm done with one number. Moving on. So I have part B and part C as well. So part B says, assuming that Fresh Limited is resident in the United Kingdom, calculate. Finally, I got some calculation. Calculate company's trading loss, property business loss, capital loss for 8 month period ended 31st March 2020. So that's an 8 month period. Again, capital losses will not be for the full year. You have to time portion that amount. Keep that in mind. Note, you should assume that the company claims maximum available capital losses. Yeah, definitely. Part C, it says, explain how Rest Limited will be able to relieve its trading loss, property loss, and capital loss for the 8 month period ended 31st March 2020. Now, this is a very good question because it is covering the trading loss, the property loss, and the capital loss as well. So let's see what the requirement says. We are done with this part. Oh, and by this first line, I know that the Rest Limited is a new business, right? It said the following information is available. Trading loss. The trading loss based on the draft account for the 8 month period ended 31st March 2020 is 141,200. This figure is before making any adjustments required for advertising expenditure, a premium, and capital losses. So I have to make some adjustments. Let's start by typing here on the spreadsheet requirement B. And firstly, I'm going to calculate the trading loss. If anyone has joined today, I'm just going to show that how to put the pound sign. You have to click on this .00. You will go to custom, click on currency. Here the currency shown is dollar. You have to change that with pound. Okay, you haven't got anything. So you will be typing rather 0 and then pressing an enter sign. So the trading profit given in the question, rather trading loss given in the question is minus 141 200. As it is a loss, so I have written this amount in a negative figure. Okay, then it said number one, advertising expenditure of 7990 incurred during April 2019. This expenditure has not been deducted in arriving at the trading loss figure for the 8 month period of 141,200. So I will be deducting that advertising expense because it is a business expense. Advertising, that's enough. Minus 7990. After advertising, it said the premium which was paid to acquire a lease office building on 10-year lease. Okay, and I can see the heading of premium paid to acquire lease. So I will be reading that. It said on 1st August 2019, Rest Limited paid a premium to acquire an office building on 10-year lease. The amount of the premium assessed on the landlord as income was 3440. So this is the taxable lease premium because it said the amount of premium assessed, like taxed on the landlord. The office building was for the business purposes and Rest Limited throughout 38 months. Okay, so I have to deduct the annual lease deduction. Okay, can I also write lease deduction? That would be is equal to minus 3440 divided by 10 because that's a 10 years lease. But I only want the deduction for 8 months, so multiplying it with 8 divided by 12. So the lease deduction is 2296. Moving forward, the third adjustment was for capital allowances, and I know capital allowances are related to plant and machinery, so here I have the note for that. It said on 1st August 2019, Rest Limited purchased 3 laptop computers at a discounted cost of 400 per laptop. So it has purchased laptops for 400, and I have to use the cost which has been incurred by the company, not the original price, right? The original price of the laptop was 850, but still I would be using 400. And on this 400, I will be getting the AIA. AIA was 1 million for the 12 months period, but this period is for 8 months, so we have to time apportion AIA as well, right? Moving forward, but they were all sold at discounted price because they were ex display. Okay. Rich Limited also purchased 3 second-hand motor cars on 1st August 2019. Details are as follows. Motor car 1, 8300 grams, 44 grams per kilometer. So this means that FY could have been appraised. No, FY is only available on the new cars. FIA is not available on the second-hand cars. If this is a second-hand car and eligible for FIA, still it will be taken to the main pool and WDA would be available at the rate of 18%. Then motor car 2, 12,390 grams main pool, 18,800 motor car 3, 125 grams special rate pool. So let's make a working for capital allowances. Working number 1, capital allowances. I know I have to make the column of description, then AIA slash FYA. I will be writing the assets on this column. Then main pool, then special rate pool, and then capital allowances. I have to copy the pound sign, control C, selecting, pasting. There is no brought down balance. We'll be starting with additions. Additions, I will be going with laptops because they are eligible for capital allowance. AIE is equal to 400 into 3, that's 1200. I would be giving AIA for 1200 and taking that amount to capital allowances. Then I have motor car 1, which will be taken to the main pool, cost at 38300. Then motor car 2, again main pool, that's 12,300, and then motor car 3 to the special rate pool. And the cost of that motor car 3 is 18800. Let's make a total and calculate the WDV, that's the written down value. I'll be copying that formula and pasting it on the special rate pool because I'm pasting the formula. So that's WDV. Then I will be calculating WDA at the rate of 18% on the main pool is equal to minus this into 0.18. That's 3708. Oh, sorry, is equal to minus this into 0.18 into 8 by 12 because the period was for 8 months. So that's 2472. That's equals to, and I'll be linking this in the capital allowances column. Then I want WDA at the rate of 6% is equal to minus this 18800 into 0.06, that's 6% into 8 by 12, that's 752. Again linking up in the column. Now that is solely my discretion whether I want to calculate the closing balances, but again I am doing this because that would enhance my presentation, right? So this is TWDV, that's tax return on value carried forward. Tax return on value is the one from which the capital allowances, the tax depreciation has been deducted, and then I'm making a total for allowances. So the total for capital allowances, I'm gonna link up the cell, and that is 4424. So I think we are done with trading profits. Again, the next heading I can see that in the question is property business profits. So I'm making a sum of all of these, and here I go. I have the trading loss. That was the first part of the question. In second part, it said property loss. So I'm making a working for property loss. Let's see what the requirement, what the information tells me about that. It says Rest Limited lets out a free warehouse which is a surplus to the requirement. The warehouse was let out from 1st August to 31st October 2019 at a rent of 1400 per month. The tenant left on 31st October 2019 and the warehouse was not let before 31st March 2020. During the 8-month period, Rest Limited spent 2100 on advertising for tenants. Due to a serious flood, Rest Limited spent 5900 on repairs during January 2020. The damage was not covered by the insurance. So that calculation is pretty much straightforward. I'll be copying that pound sign and pasting it in the computation. I'll start by writing the rent. That is, the rent per month was 1400 and the property was let from 1st August to 31st August. 1st August to 31st October. That's August, September, October, 3 months. So 1400 into 3, the rent is 4200. Then I'll be deducting advertising, and that expense was 2100. Then I would be deducting the amount for repairs, that is 5900. If the company has received anything from the insurance company, that would reduce the amount of allowable expense to be shown as repairs, right? So if I make sum of all of these three, that's my property loss. Then it says loss on disposal of shares. So that's basically the capital loss. Let's see what it says. Again, I have to put up the pound sign, Control C and Control V. Here it says, on 20th March 2020, Rest Limited sold its entire 1% holding of Pound 1 ordinary shares in Worthless PLC for 21,400. So that's the disposal proceeds. Let's write the disposal proceeds, and these are 21,400. It said Rest Limited purchased these shares on 5th August 2016 for 26,200. So the cost, the unindexed cost, is minus 26,200. So this means that there is already a loss on this asset or loss on these shares. If there is a loss, we do not have to calculate the indexation allowance, because just like annual exemption in individuals capital gains, allowances, indexation allowance cannot create a loss. It can only take down the gains to nil. So if there is already a loss, we do not have to calculate the indexation allowance. So the capital loss, the question required is 4800. So students, I am done with the requirement B of this question. Okay, I have a question from Jakarta. Can you please tell the premium paid? Yeah, sure, I can tell you the premium paid. That is, yeah, that's into 8 by 12. I think you have not done that, right? Okay, Muhammad Ali, yeah, please see the lease reduction. Yeah, I know some people are facing internet issues these days. I myself faced an internet issue day before yesterday when my internet just stuck. Yeah, I just told that if the repairs from the amount of repairs, if I have received some amount from insurance company, I'll be reducing the allowable expense which is shown in the property income. Like for example, the amount spent by the Rest Limited is 5,900, and out of that 5,900, I have received 5,000 from the insurance company. So I would be writing the net expense, that is 900 in the calculation, right? Yeah, lease premium point. as the period was for 8 months, so the deduction has to be for 8 months, right? Yeah, Ms. I can show you the calculation for disposals. That is, disposal proceeds 21,400 and the original cost was 26,200. So this means we have a loss of 4,800. We know that we have to deduct the amount for the, you can say, indexation allowance, but that is only in the case where we have a capital gain, because indexation allowance cannot increase the loss or cannot create a loss, right? No, Jakita, we don't have to uh, calculate the lease premium, because in question it said, I told you, it said that it is written in the question that the amount assessed on the landlord is already the taxable lease premium, right? Sandhya, I just answered this question. We do not have to calculate the taxable lease premium because it is already given in the question. Okay. Okay, so that's part B of the question. Let's move to some other information. It said Rest Limited does not have any 51% group companies. Rest Limited will continue to trade for the foreseeable future. And in part C of this question, it said explain how Rest Limited will able to relieve this trading loss, property loss, and capital loss for the 8 months period ended. Now I have to tell that how these losses can be relieved. Rest Limited does not have any 51% group company. So there is no chance that there is a 75% company. So this means that we cannot have we cannot have our loss transfer to our group companies, right? So this means that trading loss, sorry. So this means that the trading loss can only be carried forward in the next accounting periods because it was the first year of trade. It cannot utilize the loss in the against the total income of the current year because there is no income in the current year, and it can also not carry it back because there was no previous year. So the only option to relieve the trading loss and the property loss is to carry forward it in the future, and obviously the capital loss will also have to be carried forward. That requirement is for 3 marks, so I'll be writing 2 3 lines for them. Requirement C, trading loss of Rest Limited will be carried forward to future years against total income because there is no other option available to relieve the loss, right? So that's for trading loss. For property loss, I'll be writing that property loss of Rest Limited will be carried forward to future and will be adjusted against the total profits. Then about capital loss, I'll be writing that capital loss will be will also be carried forward against future chargeable gains. And that's it. Now I know I can see just one word, but When the examiner will be checking your answer, he'll be clicking on it, and by double clicking, he can see what you have written. And don't worry about the spelling mistakes. So guys, we are done with this 15 marks question. Moving forward, let's do one more question. This is a very interesting question, and this is the question from the recent past paper, that is from September December 2020. Here it says in requirement A for 10 marks, calculate Harvard Limited's corporation tax liability for the 4-month period ending 31st March 2020. Again, the short accounting period is tested again and again. And now I have to calculate the corporation tax liability for Harvard, right? Let's start. Here it says that in the question, you should assume that today's date is 25th March 2020. You don't have to assume that today is 11th Feb, right? Today is now 25th March 2020. It says Harvard Limited has previously prepared accounts to 30th November, but has decided to change its accounting date to 31st March to be conterminous with the corporation tax financial year. Like it is trying to align its accounting period with the tax year. Then it says the company's forecast draft statement of profit or loss for the 4 months period ending 31st March 2020 is as follows. It has given us the operating profit, then income, and then so on, everything, profit before tax. Let's recalculate what we can do. It has also given some notes. I can see 4 of them, and the other note 5 for is for capital allowances. I have to calculate the corporation tax liability, so let's start. Requirement A, I'll be writing the corporation tax liability for the year, sorry, for the 4 months period ended 31st March 2020. I have to insert the pound sign, custom, currency, pound, okay, 0, enter. I'll be starting this with the operating profit. Let's see what the question says. In note 1, it said, now I can see that note 1 is related to the operating profit, right? So there might be some adjustments to that. It said depreciation of 11760 and amortization of leased property of 1300 see below have been deducted in arriving at the operating profit figure. So I will be adding that back, adding them back. 715,500 is the amount for operating profit. Adding back depreciation. Depreciation is 11760, and then amortization is 1300. For Pakistani students, I'm going to say something in Urdu. जहां पे भी डेप्रिसिएशन क्वेश्चन में देखें फौरन से उसको ऐड बैक करें. That is the time saving technique. ठीक है? Okay. So for the students who cannot understand Urdu, you just have to add back depreciation immediately as soon as you see that in the question, right? And the question relates to the trading profit adjustments. Then it said, on 1st December 2019, Harvard Limited acquired a leasehold office building. Okay, then we have to pay a lease premium as well, paying a premium of 7,800 for the grant of 20 years lease. The office building will be used for business purposes by Harvard Limited throughout the 4-month period ending 31st March 2020. Now, in earlier question, many of you were asking that why I have not calculated the lease premium, the taxable lease premium. Here I will be calculating because here it has said that we are paying a premium of this. Here it has not said that the amount assessed on the landlord is this, right? So lease deduction, making sure that the deduction will be for 4 months period. So is equal to minus brackets. The premium paid is 78,000 into brackets 51 minus n, that is 20, divided by 50 bracket close, in sorry, divided by 20 into 4 by 12. So the amount is 806. I am going to double click on it so that you guys can see what I have done. Gorak, I have written up my number, my mobile number in the WhatsApp group. You can text me up on the WhatsApp so that I can answer your query. Okay. Okay. Hopefully everyone has seen this. I'm moving forward. After lease, it said note 2. Now, note 2 is related to the property business income. So let me read it out. It said it might have some relation to the profits, but again, I'll be reading that. It said Harbor Limited lets out freehold warehouse, which is a surplus to the requirement. On 1st December 2020, the tenants paid a rent of 156,600 for the 6 month period to 31st May 2020. Then it said on 1st December 2019, Harbor Limited paid insurance of 1800 for the year ended 30th November 2020. Right? Then it said the chargeable gain in respect of the disposal of investment on 10th March, no indexation allowances available. Okay. Then it said the interest paid in respect of the Harbor 6% loan note with an interest for 6 months of 24,600 being paid on 1st January 2020. Interest of 12,300 will be accrued at 31st March 2020 and will be with the corresponding accrual at 1st December 2019 being 20,500. The loan notes were issued in order to finance the company's trading activities. So this means that the interest has to be deducted from the trading profits. Let's see. Interest, the amount of interest which should be deducted should be interest received, sorry, interest paid plus the closing accrual minus the opening accrual. So it said that the amount of interest paid is 24,600. The accrual at the end of the year is 12,300, which should be added, and the accrual which was at the start of the year is 20,500. Now, opening accrual was something which is related to the last year. So what we'll be doing is equal to minus brackets is equal to minus brackets. That's 24,600 plus 12,300 minus 20,500 brackets close. That's the amount for interest. Okay. Moving forward, it has some information related to the capital allowances. Here it says the tax written down value of both the main pool and the special rate pool as at 1st December 19 was pound zero. So there was no opening. On 1st January 2012, Harbour purchased a plant and machinery for 548,000. This will be a long life assets for capital allowances purposes. Now let's see what I have to do with this. I know that the period is for 4 months, so the AIA won't be 1 million. So AIA is not available in full. So let's see what we can do. We are going to make a working, that's working number 1 for corporation, sorry, capital allowances. The first column I'll be making is description, then main pool, although it is 0, but still I have to write it. Then special rate pool, and after special rate pool, the column is for capital allowances. The opening balance as shown as of the main pool is 0. Oh, sorry, I have to make one more column, so I'll be selecting them, Control X cut and Control V paste. I forgot to add AIA. Copy and paste the pound sign. Okay, addition. According to the question scenario, it has purchased a machinery which is a long life asset. So I would be writing machinery in the AIA column. The cost of the machinery is 548,000. Now I have to calculate the AIA for 4 months. That is equal to minus brackets 1 million. That's 1,000,000 into 4 by 12. Amount for AIA is that's 3333333 something 0.333, right? So After deducting this AIA, the amount left is 666, something like that. I think I have put up another zero. I have to extend the cell because I have not done the rounding of thing. Yeah, it shows some more amount. Okay, so the AIA will be taken to the capital allowances column, and this remaining amount will be taken to the special rate pool column. And afterwards, WDA will be applied at the rate of 6% on this amount, is equal to minus this into 0.06 into 4 by 12. And then I'll be linking up here. Normally I do this extending thing at the end, but now I have to do this because the amounts are too big. Making a total of the last column, that will give me the amount for capital allowances. That's total allowances. And now I also will be calculating TWTV carried forward. So is equal to minus brackets, sorry, on the special rate pool. I've done it on the main pool. So I'll be deducting this amount as capital allowances from the main column, is equal to, and linking up by making a total of the above. Here I got the trading profit. Okay, let me see whether I can round it off. Format. Let's select all this. Yeah, that's better, I guess. You can round off the figures by selecting them. Like I have selected all this and click. That's total pound 0.00. This means it will be rounded off up to 2 decimal places. Yeah, so I think that will be helpful for my presentation. Okay guys, so we have calculated the trading profit. Afterwards, we have to calculate the property income because there was property income and it had note 2 and then chargeable gains. With respect to chargeable gains, I have read the note 3 where it said the chargeable gain in respect of the disposal of investment on 10th March, no indexation is available. So this means that the gain is as it is. So I'll be writing the chargeable gain straight from the question, that is 104,300. I have to calculate the property income and it had note 2. In note 2, it said Harbor let out freehold warehouse which is surplus to the requirement. It paid rent. The tenant paid rent of 15,600 for the 6 months to 31st May 2020. Now we know that in corporation tax, property income has to be calculated using the accrual basis approach. So this means that we only have to record the rent which is relevant to the accounting period. Accounting period ends on 31st March. So and the rent the tenant paid to us was up till 31st May. So we have to deduct the extra 2 months rent. Then it said on 1st December 2019, Harbor paid insurance of 1800 for the year ended 30th November 2020. So we only have to take the insurance expense for uh, December, January, February, and March. That's just for 4 months. So let's calculate the property income by ourselves and let's see what it says. Working number 2, that's property income. I will be applying the pound sign. I am just going to copy it from here and let's paste it here. Let's see what the property income says. First, I will be writing up the rent. Rent is 15,600 and that's for 6 months, but I will be taking rent for 4 months. 4 by 6. That's 10,400. Then I'll be deducting insurance expense. The insurance expense is 1800 minus 1800 rather into 4 by 12 because I just have to make calculations on the accrual basis. Making a sum of the above, here are the amounts for cap property income. I will be linking up in the main format, and here I have the property income. Let's make a total of all the three above, and yeah, we got the taxable total profit. Now I have to calculate the corporation tax liability. So what I'll be doing is I will be multiplying the taxable total profit with the tax rate that is 0.19. Yeah, and that's the amount. So I again have to round it off. So I'll select it, these two, and click on it. That's it. So students, this was the corporation tax liability for 10 marks. And again, it had a good amount of calculations in it. So this was requirement A. Let's move to requirement B. Let's see what it says. Okay, in requirement B, it had two parts. Part 1, 2. Part 1 is again briefly explained, theory. In part B, it said if Harbor Limited prepares, I think let's go with the flow of the requirements. And again, it's also had some additional information. It also had some additional information, like I can see this information here. And it has given us the Word format. So this means that I will be writing up some theory on it. Let's see. Requirement B1. It said, briefly explain the difference between tax evasion and tax avoidance. It is a very good question. Tax evasion is illegal, tax evasion is legal. Let's see what it says. And how HMRC are likely to review the situation if Harbor Limited extend its accounting period in order to save corporation tax. Okay. So this means that this is not a generic journal theory. It is the theory related to this specific scenario. So let's see. It said the directors of Harbor Limited now realize that it will be beneficial for the company to prepare accounts for the year ending 30th November 2020 rather than for the 4 month period ending 31st March 2020. This conclusion is based on the following information which is available in respect of the period from 1st April to 31st, so from 30th November 2020. Number one, Harbor Limited will not purchase any further plant and machinery during this period. So the full annual investment allowance of 1 million will be available in respect of the long life plant and machinery purchased on 12th January 2020 for 548,000. Harbor Limited will sell its investment at on 10th April and this disposal will result in an allowable capital loss of 4,200. So let's see what we can write it up. I'm going to write up for requirement B part 1 first. Let's see what we can write. Firstly, we have to tell that what is the difference between tax avoidance and tax evasion. It said tax evasion is illegal and involves the reduction of tax by not providing information to which HMRC is entitled or providing false information. That is basically suppressing information. That's the first point. Then we can say tax avoidance involves the reduction of tax by use of lawful means, that is by investing in individual savings account, etc., etc. Then let's apply these to the scenario. It said if Harbor Limited, obviously it's a company, extend its accounting period in order to save in order to save tax, then HMRC will not view this as tax evasion because it is a lawful thing for a company to prepare the accounting records to whatever date it wishes. So we have applied, firstly, we told the examiner that what is the tax evasion and what is tax avoidance. And then we applied it on the situation. So this was the requirement B part 1. Moving on to requirement B part 2, it said if Harbor Limited prepares accounts for the year ending 30th November 2020 rather than for the 4-month period ending 31st March 2020, calculate the revised figures that will be included in respect of capital allowances and chargeable gains. So I have to make some calculations, but again, I have I am not provided I am not provided with some spreadsheet. So this means that I have to make calculations here. Okay, let's see. It's a requirement B part 2. Let's see. Let's first talk about capital allowances. It said since the full amount of annual investment allowance will be available, capital allowances will increase to GBP, that's the Great Britain pound, 548,000. Okay, in exam, you can also add the pound sign. You can try if it is possible by using shift and 3 from your keyboard. Like you can, if you want to write the pound dollar sign, you can write shift and 4, that's dollar sign. In exam, sometimes it can give you the access of using the pound sign by applying shift and 3. So do try that in exam. Then let's write something about chargeable gains. The capital loss will be offset against Harbor Limited chargeable gains because they will arise within the same accounting period. This will reduce the corporation tax, chargeable gains. 2. Let's calculate. The gains were 104,300, and they said they will be having a loss of 42,000. So the gains will be reduced. So I have to make a calculation. So I'll be using this calculator. 104,000. Sorry, 104,300 minus 42,000. Yeah, that's 62,300. So I have to write it up. 62,300 reduced to 62,300, and obviously have to write GBP as well. So students, this is how you have to write the theoretical area in your answers. You don't have to write essays. You just have to write the relevant points. Agreed? So I think today we have done a good amount of practice, and by this practice we have covered almost all of the areas of corporation tax, and some areas are not definitely covered in this question, especially groups area. So I would strongly recommend you to solve that area from the Captain Exam kit. And if you encounter any problem, you can contact me. You have my contact number in your chat box. You can take it up from there. Further, tomorrow, as we have the last day of the webinar, and we are left with the two minor areas, that is the value added tax and inheritance tax. So we'll be hitting those areas tomorrow. I will be going through them quickly so that we can do more questions tomorrow, right? So make sure that you guys revise those areas today and join the class tomorrow on time. Once again, I think it is my responsibility to tell you guys that as you all know that COVID is again at rise, please do take good care of yourself and your family. Avoid going out unnecessarily. Use mask if you do have to go out. Take good precautions by maintaining social distancing and so on. Take care, guys. Hopefully, we'll meet tomorrow at 4 p.m. sharp. Stay safe. Bye bye.